Greetings, ladies and gentlemen, and welcome. I am the Crypto Crow, and I've got a very big video for you today. And the first thing I'm going to do, I'm going to be going over why I strongly believe that Cardano is very likely, let's just say there's good potential, that it's going to hit $7.85 by the peak of the market. I'm going to explain why. I'm going to break it down in the numbers. You're going to be pretty surprised when you take into account everything that I put into this. I'm also going to be doing a segment towards the end after the Cardano stuff. I've got two Cardano predictions, one short term, one long term. And then I'm going to follow up with a segment about CrowTrader bot, because we just launched DCA, dollar cost averaging, into the bot, and it is beautiful. Changes everything. I'm going to show you how to use it and what that means. And before I get into all of that, I'm going to do this quick paid promo. This is with Akash. Now, Akash, this is a paid promotion. Disclaimer, all that stuff is in the description of the video. The D Cloud for DeFi, and the world's first decentralized cloud computing marketplace. This is actually kind of interesting, and it seems to be that they're growing and they're doing a lot of different stuff. I'm going to show you the token price. I was kind of surprised. Akash D Cloud is a faster, better, and lower cost cloud built for DeFi, decentralized projects, and high growth companies, providing unprecedented scale, flexibility, and price performance. 10 times lower in cost. Our serverless computing platform is compatible with all cloud providers and all applications that run on the cloud. You can go to Akash, AKASH.network, and that's their website, and you can go into a lot of information about the project here. I think these are pretty daggone cool. A super mini computer, apparently. Reserve yours now. I'm interested in checking one of those out just to have it on my desk, because I think it looks kind of cool. I want to see what all it does. But the Akash token, AKT, is currently trading at 76 cents, up 15.4% on the day, $925,000 in daily trading volume. So there's definitely some interest in this project. So you might want to check it out. And when you do, apparently they have a new listing on Bitmart exchange. So bitmart.com is the new exchange that's listing the Akash token. So there you go. Check it out if you're interested, and check out the website. There'll be links in the description. We'll be right back with Cardano. I have what I believe is going to be an epic video today, because quite frankly, I didn't even want to do this live, because I want to keep it straight to the point and then start letting you guys play around. Because I'm telling you, as the market changes and everything starts to happen, and I continue to watch Cardano, I've got two predictions today. And I haven't been doing a lot of these because I really just don't like doing them, to be quite frank with you, because I don't want anybody to come back and be like, oh, Crow, you said this, you were wrong. Listen, anything's possible in the crypto market, for better or worse. This is all about Cardano, my number one, my favorite, my Maine Coon cat's namesake. Okay, I'm a big believer in Cardano and everything happening, and I've got two price predictions, and then I've got a methodology that I'm going to show you so that you can make your own price predictions moving forward as we continue to move into this market. And I've got a very short-term price prediction, and then I've got a peak of the market price prediction. So top of the morning to you. Let's get started. Now, the first thing that we're going to look at here is January 3rd of 2018. What you're going to see here is ADA was $1.31. That was its original all-time high, $1.31. And Bitcoin's dominance at the time, as you'll see, was only 35%. So what happens is, for those of you newbies out there who haven't been following me, haven't been watching any of my calculatory videos, what happens is the FOMO rises with Bitcoin. Bitcoin starts to pump, all this new money, all the institution investors, all of the big players are buying over the counter, they're accumulating, they're holding, they're lowering the overall supply available on the market, and retail investors buy in en masse, hoping to make a quick return on their money. All right? As that happens, the market cap is growing and changing until it reaches a certain peak. And during the course of a bull market, the investment capital that goes into Bitcoin typically starts to dump. It starts to exit that Bitcoin position into the altcoin markets, where further gains are much more easily had. Okay, so at the peak of this last market, January 3rd, Bitcoin's dominance was down from in the 80s down to 35% as people took profit, put it into the altcoin market to further extend their return on investment from there. Of that dominance, ADA or Cardano, back when it was just an idea, just when it had a crappy wallet full of bugs, there was no Shelley, there was no Goguen, there were no smart contracts, there was nothing but a white paper and a genius mind who put together a lot of other genius minds to work on this. 3 different groups, Cardano Foundation, IOHK, and Emergo, all working together to create this new blockchain that they basically say the goal of which is to change the world. I believe they're well on their way. Now, in that, the circulating supply at the time of Cardano was 26 billion ADA. So what you do is you can take that $1.31, multiply it by the circulating supply, and you get a $34 billion market cap. Okay, 24-hour volume at the time was $849 million worth of ADA were being traded every day. Keep in mind, this was also before staking. This was before any of that total circulating supply was being tied up and staked in delegation nodes like we have today. Now, December 5th, 2020, that would be today. When I'm shooting this video, you're going to be watching it on Monday, so you're going to see this like on the 7th. ADA's current price is about 15 cents. It's been bouncing around between 15, 16 cents. Bitcoin's dominance is currently at 62.8%. Okay, the majority of the money in the cryptocurrency market cap is sitting in Bitcoin, riding that wave to the top, hopefully to $150,000 Bitcoin by the peak of this market. ADA's dominance is not even 1 full percent right now. Okay, market cap's at only $4.6 billion in 24-hour trading volume is actually higher at $1.2 billion in ADA being traded consistently. Okay, now we're going to leave this and then we're going to go into these numbers. Circulating supply of ADA right now is 31.112 billion ADA. All right, and it's growing. Let's just say, and I didn't calculate this in, but let's just say, hypothetically speaking, that the total circulating supply for ADA grows by roughly 5% a year, okay? So if you want to play with numbers further, add a 5% tally per year. I should have done this in this, but I didn't. I forgot. But the current live stake of ADA is 20.24 billion ADA. So out of the circulating supply, 63.8% of the total available ADA is delegated to staking nodes, which means it is not on the market. You can't buy or sell them. Nobody's trading them. They are simply delegating them to the node, to nodes like the Crow node, to empower and decentralize the network. This is something that was established with Shelley, okay? Currently sitting on the markets, 11 billion ADA, 11 billion ADA. All right, keep this in mind because this is a big factor in this prediction. Now, moving forward, we're going to get rid of that. We're going to get this. This is all very simple. And this is something that you can ultimately calculate on your own and play with as you see fit. I believe we're going above $150,000 Bitcoin at some point at the peak of the market. I think 100,000 is almost, to me personally, and again, I'm not a financial advisor. I don't know what the hell I'm talking about. I'm just some dude on YouTube. I'm not always wrong, but I'm wrong. And I'm right a lot. Okay. But I think that we're going to see a $150,000 plus. We could even get to a $200,000 Bitcoin, folks. I mean, realistically, it could. Institutions and what's going to play out over the next year, it could get absolutely insane. And the available supply of Bitcoin could continue to lower as more institutions are accumulating and holding it and keeping it off the market. All right. And the thing of it is, too, is a lot of these institutional players with their billions of dollars and their millions of dollars or whatever going into the Bitcoin market, a lot of these guys are buying it on over-the-counter exchanges. Over the counter means they're not suffering the slippage if they were to go and drop $10 million or $50 million on an exchange like Binance or Bittrex or Coinbase or something like that. Slippage is, maybe there's only $1 million worth of Bitcoin available at, 15,000 bucks, right? So, and once that order's filled, then the next one is 15,500, 16,000, so forth and so on. And so as you're trying to fill your total amount, you're suffering what's called slippage, and that happens both up and down in the market. So people trade over the counter for large sums and typically negotiate a discount for buying such a large amount so that they're not suffering slippage, but they're still getting a pretty decent deal. So those over the counter market trades don't really affect the overall Bitcoin price because it's generally the markets. However, the more is accumulated over the counter, that is still pulling Bitcoin out of the total circulating supply available on exchanges. So as demand rises, you see what's happening? So it's the whole supply versus demand thing. Now, circulating supply of Bitcoin currently is 18.5 million. There's only ever going to be 21 million Bitcoin ever, and we're never going to see it. Right? We're never going to see the 21 millionth Bitcoin ever, I don't think. However, we're currently looking at 18.5. Now, that being said, we're going to see a little bit more than this over the next year, okay? As miners are continuing to mine it and so forth and so on, we're going to see a little bit more. I didn't take that into account. I don't think it's going to play it. I don't think it's going to play a significant factor in this. The market cap is $2.7 trillion. 2.7 trillion. 1, 2, that's a million. That's a billion. That's a trillion. $2.7 trillion at $150,000 Bitcoin. Okay. Now you're going to think, what? That's crazy. We were at a $20,000 Bitcoin and we didn't even break $1 trillion. Yeah, we didn't. We also didn't have how much bought up and accumulated, not just over the bear market, but what's going to continue to get accumulated over the next year while we are searching for that market peak. So much more Bitcoin is going to be accumulated and bought up by institutions. It's going to get crazy. We're seeing all this stuff about regulations. We're seeing FinHub creating their own, or the SEC basically creating their own crypto office, right? So it's basically all going to be about regulating the cryptocurrency space, which is going to make a lot more institutions feel comfortable to get into the crypto space and accumulate Bitcoin and likely other stuff as well. So we're going to see a lot of drastic changes in the market as we continue to garner more and more adoption. I think I've seen so many reports and so many articles about institutions potentially driving up not just to a $2.7 trillion market cap, but in excess of $5 trillion to $10 trillion in the market cap in the future. So to see that we can see $150,000 Bitcoin, or to expect that, which you can go to the stock to flow chart, which I've shown many times, and you can see $150,000 is more than reasonable for where I think we're heading over the next year plus, okay? Now, given that, if 3.13%, now keep in mind, we had Cardano maintained 3.13% of the market cap, dominance when it was just an idea. Okay, this was before decentralization. This was before Goguen and smart contracts and everything that Cardano's basically preparing to launch now over the coming months. And 3.13%. It's likely this could be double that. This could realistically be double that by the peak of this next market. But I just wanted to find out, where would we be at $150,000 Bitcoin peak market price when Bitcoin's dominance continues to drop and ADA gets back to just 3.13%? And when you calculate that, that calculates to $87 billion. $87 billion worth of that cryptocurrency market cap going where? Going into ADA, going into Cardano. And I believe I still believe that this is fairly conservative, folks, because the reality is right now there's 11 billion ADA on the market being traded right now that's not delegated to staking nodes because people are trying to profit from its swings more than they're trying to earn, 5 or 6% or whatever it is in rewards from just delegating it, just throwing it onto a node and reaping the rewards of that passively, a passive income, which when Cardano gets to that point, when Cardano continues to rise in price and we start getting closer to that $2, $3, $4, do you have any idea how much money people are going to make that have been accumulating this whole time and have it delegated to staking nodes? There are going to be so many stinking wealthy people in this market doing everything they can to avoid capital gains. Good luck with that. But make sure you plan that out, believe me, because that's no fun when you got to sell your car and take out a home equity line to pay your freaking taxes. It sucks. But it's got to be done. So plan for that in the future for all you ADA holders that are thinking you're going to I don't know, whatever you think. But anyway, that basically takes us to a $7.85 Cardano. Now, you want to play with the numbers a little bit? Let's just say Bitcoin's $100,000. Maybe it doesn't peak out any higher than that. We just get to $100,000. Multiply that $100,000 by the circulating supply, which is going to give you your market cap, okay? And then once you have your market cap, take 3.13% of that. You'll get another number here, and then divide that by the available ADA on the market. Which is roughly going to be 11 billion. It's going to be more than that, obviously. So let's just say this is, 750, give or take, okay, based off of whatever the available supply is at the time. Quite frankly, I think that as ADA grows in popularity, less people are going to be selling it, more people are going to be delegating it to nodes, which means there are going to be less available ADA on the market. All right, so a friend of mine, somebody I know, basically went and bought 15,000 Cardano when it was 11 cents. 11 cents. I'm going to predict right now, I'm going to predict a 23-cent ADA by the end of January. I think with everything that's going on and it basically slowly building up steam like a tea kettle, I think when it finally pops, I think a lot of stuff is going to pop in January. But I'm going to hazard a guess and say that I could see a 23-cent or more ADA by the end of January. And with that, his $15,000 he invested in ADA when it was just 11 cents will be earning him 12 cents profit per coin times 136,363 ADA, which is how many he would have gotten roughly for 15 grand at that time. And he would have made $16,363 over a period of what, 3.5 months, 4 months maybe? I don't remember exactly when that was. So yeah, that's pretty good. That's pretty good for a newcomer in the crypto space. And if we even see a $5 ADA, do you have any idea how many people there are going to be all over the world? And the thing of it is too, folks, that I want to point out is even when we reach these new heights, these new all-time highs, doesn't necessarily mean it's a good idea to liquidate. It really doesn't mean it's a good idea to liquidate, because ultimately what you're talking about is, yes, we know in the market, we know about market peaks, we know the market cycles, we know how a lot of this stuff works. What we don't know is when. We don't know the whens of this. Now, while a lot of people are going to be looking for this, we don't know. If a lot of people are saying, oh, it's going to $100,000 and people start dumping, it's going to slow our roll. And maybe that FOMO, maybe that momentum gets slowed down to the point where maybe we stop at 150,000 and turn around. Maybe people don't want to sell. Maybe the institutions and all the big players that have accumulated so much say, we're not going to sell. We're just going to keep it right where we're at for whatever reason. And we don't see a big dump off like we did in 2017. We don't know. So always be careful, be cautious. What I do know is that so many people are going to be making passive income streams with their ADA. But just remember, this is a market cycle, and whatever you're making during the course of time that you're staking and delegating your ADA on a node, when it's at a high and you're like, oh my gosh, I'm making so much money every week, this is insane, it's not going to last. So make sure you plan wisely with whatever you make in the crypto market. Now, again, I want to basically finish this out by saying, hey, anything is possible. We could be in a World War IV by then, and the whole world changes on a dime. We don't know what's going to happen. Anything is possible. But if things go the way they went in the 2016, 2017 to 2018 market, and we're going to see a lot more of that, plus all of the additional adoption that's coming to play, I think this is going to be a lot more likely than not, and I'm very, very excited about it. So on that note, folks, crow your freaking coins and play with the numbers. See what you come up with. What do you think is going to happen? Let me know in the comments below. How high do you think ADA is going to get? Are we going to just see $3? Is that it? Oh, a $3 Cardano? I don't think so anymore. I used to think that that might be the low end. I don't think that's the low end anymore. To me, I believe $5 is the low end. I think this thing could get up to as much as $14, $15, depending on how high Bitcoin gets and how much that dominance decides to change over the course of the peak of that market. So we'll just have to wait and play it out. I could be entirely wrong, so don't make any big investments based off of this video or anything I tell you, because I could be a complete moron. But just being very upfront with you. But I will also say you might want to take a look at DIVI project, because I know they got some big stuff brewing. I think it's going to catch a lot of people by surprise. I don't know for sure, but I'm just saying you might want to take a look. All right, ladies and gentlemen, now I'm going to tell you what I'm most excited about, which is this is a huge deal, especially if you've already got CrowTrader and you kind of used it in the past, but the market wasn't really hot. You know, there wasn't a whole lot of stuff going on. Telegram wasn't doing it for you for whatever reason. We just launched the new retail version of 1.2 with DCA, dollar cost averaging. Now, CrowTrader does run on Windows or Mac or Linux. Okay, so you can run the bot. Now, I'm going to show you how to run DCA and what it means, okay? What it means for trades. Now, this is the tutorials tab. I'm going to be adding, there are going to be more tutorials to this video, but we're going to go into backtesting. Now, when you go into backtesting, we've added some strategies. We've added some things. At some point, we're going to do a video explaining every strategy. That way, when you're fine-tuning things, the base settings for these strategies are pretty solid. I mean, they really are, because we've got J-Rod, who some of you guys know is like a boss trader, and he's helped us to like fine tune a lot of this stuff, but you can change anything. All right. So if you really know what you're doing, you can change it, or you can stick with base strategies and just change basic things. We're going to start with Bollinger Band. It's the first one. It's one of the easiest to use, most easy to understand. You know, looking at a Binance, you know, it looks like Aave is doing pretty well, and it's been doing pretty decent against Bitcoin. So we're going to experiment with that a bit. We're going to go with an order type of market. We're going to do starting capital of 0.1 Bitcoin. We're going to do a fixed amount, 0.01 Bitcoin. Now, why are we doing 0.01 if we've got 0.1? Well, because we're going to be using DCA. All right. That's pretty much the extent of that. We'll do one without DCA. Here's what happens. When you're bot trading, what happens is if you're trading with Bitcoin as your base pair, and let's say I were to buy, you know, 10 Aave tokens, okay, at you know, I don't know, $10, whatever they are, okay, and I buy those 10 tokens at $10, but then the price drops. Well, when the price drops, or if Bitcoin spikes up and leaves that altcoin in the dust, we end up with a bag. The longer we have a bag, the less number of trades we're able to make, the less we're able to accumulate ROI, return on investment, all right? With DCA, I can set it, I'll show you, I'll just show you. I'm not gonna turn it on, I'm gonna turn it off. But this is it. So we can set the DCA any way we want. I just keep it simple. Percentage of drop, if it drops by 1%, I wanna double down. And I wanna do that up to 5 times. I like a 5x DCA. It's just something I've always tried to use, and it's something I've been gunning for with this Dagon bot forever. But we're not going to use that yet. We're going to start off, because what happens is with DCA on, wow, I look really fleshed out. So anyway, with DCA on, what happens is if the price drops according to whatever my settings are, whether it's 1%, 2%, however often I want to double down, depending on the market situation, I'm ultimately lowering my average exit point. So if I bought a token at $10 and it drops down to $9, and I doubled down. Well, now I've dropped my average entry price down to like, I don't know, 9.5 cents or 9.5 bucks or whatever, instead of $10, which means I don't have to get that. The price doesn't have to go as high for me to reach a profit point. Does that make sense? So as the price drops or Bitcoin goes up and they're separating, I'm basically shortening that spread and giving myself a sooner exit point at profit than I would if I were just holding the bag and letting it play out however it was going to over whatever period of time. Okay, I hope that makes sense, and I'll show you here so it makes more sense. We're going to do market orders, fees. This is on Binance. Now, I also want to point out right now we're on Coinbase and Binance. Binance has been kicking off US traders. We are working on adding additional exchanges now. So if you're in the United States and you're still using like a legacy account on Binance, they're even starting to send email notices saying, hey, you've got 24 hours or 30 days or whatever it is to get out. Basically, we want you gone. And they're trying to push people to Binance.us, which is fine, but we're not active on that yet. But we are always on Coinbase. Coinbase fees are just a lot higher. So we are working on adding more exchanges. We're going to start this off on a 15-minute candle. So we're going to be using 15-minute candle, and we're going to go over 14 days. We're going to leave everything else here just standard. We're not even going to touch anything else. We're going to see how well we do with this pair. Okay, so we've got a lot of trades. Jesus. All right, so we've got a lot of trades, and we've got 29 trades, and we're looking at 4.5%. All right, so we've improved our Bitcoin position by 4.5%, trading ADA over 14 days. Not too shabby, but I think we can do better. Now, one of the things I'm going to try and do is I'm going to increase my gain. So because I'm seeing a lot of growth, and in my back test, I'm seeing, wow, if I were to buy and hold, which buy and hold that's not what we're doing with a trading bot, so that doesn't really matter so much. But if I were to buy and hold, my gains would be much better. Well, if you're not going to buy and hold a whole bunch of tokens, right? That's just not the nature of bot trading. I want to make sure that I'm getting gains on these trades. So at 4.5%, okay, I think I can do better. I'm going to bump that up to 2%, which basically means when I go into a trade, I'm looking for at least 2% or better before I exit that trade. Okay, so if I'm doing that, I've got a lot less trades. I'm at like 16 trades and I'm only at 3.65%. So I'm going to keep it at 1%, but I'm going to DCA. I'm going to do a 1% drop DCA. So every time the price drops by 1%, I'm doubling down, and I'm going to do that up to 5 times, and I'm going to see what happens. Okay, so now total percentage gain, 9.91%. So just by using dollar cost averaging as part of the algorithm for this particular trade, this trading pair, I'm basically doing roughly 10%. I'm improving my Bitcoin position by 10% every 14 days through 33 trades. Now, what happens is you can see where we've DCA'd, okay? So you can see this trade we bought in, we exited at over 1%. On trade 2, we actually DCA'd 4 times until we were able to exit that trade, but we exited that trade. Now, what would have happened here is if we didn't have DCA, we would have bought in and we would have just held all this time, and we'd probably still be holding a bag. But because we DCA'd, we lowered our average entry point, we were able to get out much quicker. So that we're holding bags a lot less. This one, we DCA'd we DCA'd twice and then got out. This one was a straight trade at almost 3%, 1%, 1.27. This trade, we DCA'd 1, 2, 3, 4 times, and we got out at a 7% profit. This is the thing. When DCA trading is a lot more profitable, because as you're averaging down, let's say the price does drop multiple times over the course of, and you're talking 15-minute candles here. So if DCA activates multiple times, ultimately you're accumulating a bigger and bigger bag of that same position, okay? As it's losing value, I know it sounds crazy, but as it's losing value, you're accumulating more, lowering your overall entry point, at which point when the crossover does happen, now you're basically, as the bot is looking for an exit, when you're at profit, you might go up 6, 7, 8%, but now you're making profit on not only your initial trade, but all of those DCAs that you did as well. So your overall profit grows substantially as you DCA. I'm telling you, DCA is where it's at. It changes the fundamentals of this bot entirely. I am actively going to be using it a lot more now, because with DCA, I feel so much more secure. I really do, because one of my biggest hangups is holding bags, because you can't effectively bot trade while you're just accumulating bags. You have to have DCA so that it improves your ability to get out of those positions more quickly. That's all there is to it. If you don't have that, it's always been difficult for me to use the bot. And that's one of the reasons why I haven't talked about it a whole hell of a lot, because I'm like, okay, I used the bot, I made some good profit, but now a lot of this Bitcoin is stuck in bags I can't get out of, because Bitcoin's pumping, the altcoin's not, and I'm screwed. What do I do? Now with DCA, I don't have to worry about that nearly as much. Now, I also want to make sure everybody understands that when you're talking about bot trading, this is back testing, right? So let's say, okay, so I did the back test. I'm very comfortable. I'm good with 10% on average return. Now, this button right here, start paper trade. And it's going to go through and it's going to give me one last chance to fine tune this strategy, make sure there's nothing weird or anything that happened. Okay, good. Now I create. Now it goes into my paper trading tab. These are all paper trades. Now, paper trading basically takes the strategy that I tested in back testing, takes that same strategy and applies it to live candles. So you're going to be able to see in real time how effective that strategy performs on the real market, not with hindsight, not based on candles of yesteryear, but now. And then once you've spent some time and you're like, okay, maybe you back test for a week or so, 2 weeks, however long you're comfortable, and you're like, okay, this strategy is on fire. You hit live trade. Boom. You hit live trade, it asks you one more time, and at this point you want to make sure you have the capital on your account that you want to trade with, or it won't let you activate it. But then you turn on live trading, and then it ends up in your live trade. As you can see right now, I'm only trading Cardano against Bitcoin, and I am currently down 0.06%. So I haven't even had a DCA yet, but I have had one trade. Now keep in mind, I just turned this on today, and I started playing with it. I went out, I did some other stuff, spent time with the family, all that good stuff. I'm back down in my office working. And that's why I'm here doing this video, or completing this video. So you're going to see a lot more. I'm going to be updating people a lot more, especially once we get another exchange on here. I might throw a little bit more Bitcoin into my Binance account just for testing purposes, so that I can show people how effective the bot is moving forward until we get on another exchange. But yeah, that's DCA, man. It changes everything for this bot. So if you've already got a license for the bot, I think it's time for you to fire it up and start playing with that back testing, get active in the community again. And if you don't have it, you might want to check it out. I also want to make sure that you guys understand, though, what you do with this bot may very well differ from what other people do, or the what am I looking for? Like, it's all risky. Anything could happen in the market. Okay, absolutely anything could happen in the market. I would highly suggest, like me, I only trade things that I'm okay with holding. I'm trading ADA right now, because if I accumulate a big, huge, heavy bag, that's just doing myself a favor. I'm not worried, right? So if I do accumulate bags, I'm okay with it. And if I get a lot of active trades and I'm improving my Bitcoin position, that's good too. So keep that in mind. Also, what you do in your trading, like your back testing results and your paper trading results, they may differ from somebody else doing the exact same strategy. I don't know why. I don't know how that happens. I'm not even 100% sure it does happen, but I've seen disclaimers on other bots and other software, so I'm just making that here. I guess that's possible, so make sure you understand the risks associated with bot trading. Yeah, results may vary, so don't. And even when I'm doing videos, I'm like, look how much I just made. Well, it's probably already too late for you, because if you're not already using the bot, you had the opportunity when I did, and if you weren't taking advantage of it, maybe you missed the boat, maybe you didn't. We'll see. Anyway, disclaimer's done. Hopefully you enjoyed this big video today. It's Monday for you guys, because that's when you guys are going to see this. And hopefully this starts off a really great week for all of us. And until next time, guys, crow your coins. I love you, miss you, mean it. And I'll see you again soon.